Hello, everyone. Thank you so much for joining us again for our webinar series. Today, we are joined by Hank Sorensen of Go Get a Listing. It is his YouTube channel. Go check it out. That is Go Get a Listing. We are going to be sharing this live today on Facebook at Maxwell Devonshire Realty, as well as on our YouTube channel, Maxwell Devonshire Realty Education Webinars, and on our podcast, Maxwell Devonshire Realty. Hank today has the pleasure of joining us, and we have the pleasure of hosting him. So thank you so much, Hank, for educating our associates on the 3 most common errors that agents have on their profit and loss statement. Agents are entrepreneurs, so it's imperative that you understand how to be profitable, because your profitability equals longevity. So Hank, the floor is yours. I'll be monitoring the Q&A. So if you do have some questions as things go on, type it in the chat below. I will ask them at the end. And otherwise, thank you so much.
Great, thanks. Appreciate it, Alex. I'm going to share my screen on a profit and loss statement. It's loading right now. You should be able to see it on your screens now. So I'm going to move the video up here just to get out of the way. What I put on here is a standard profit and loss statement. Now, all my contact information is up in the left-hand corner. And for those people that are on the podcast that can't see this, the best email to reach me is gogetalisting@gmail.com. The title of my YouTube channel is Go Get a Listing. So if you just put in my name, Hank Sorensen, with an S-E-N at the end, because I'm Danish, not Swedish, and put in Go Get a Listing into YouTube, then it'll pop up. The YouTube channel just has a bunch of collections of videos on team operations, business financials. I'm a numbers guy at the end of the day. If something doesn't make sense to me on numbers, then it just doesn't operate. And I do a lot of coaching and consulting with agents on their business financials, predominantly profit and loss statement, although when we get into larger teams, we'll also have balance sheets and possibly a cash flow statement. But P&Ls are what I do literally on a daily basis. And most recently on my YouTube channel, I've got a $70 million or $75 million team, and also a $40 million team that I went over their 12-month profit and loss statements line by line. So if you're looking for larger teams and how to see how they operate from a financial perspective, I've got videos up on that. And those are my latest 2 videos on there. So what I'm going to go over with you today are the 3 most common errors that I do see on agent profit and loss statements. Now, what I have on the screen is a prototypical profit and loss statement of a $43 million team that does 120 units. But don't think, oh my gosh, I'm a single agent, I just did 7 million last year. Hey, great, that's a fantastic volume for you. Don't worry about that. It's just, you can get insights out of what I'm going to talk about today. It's just, instead of it being me, which is the rainmaker of the team on the screen that's in front of you, me is the rainmaker of the team, the leader of the team, and then Beverly, Joe, and Tom are the 3 buyers agents. The totals column, if you're a single agent, the totals column is what's going to be relevant to you, because all of the commissions and all of the expenses that you're going to see on this will go under your name because you're the only agent operating on the team. That's fine. You're still going to get information out of today. I promise. Just be patient. Go with me on this. But the number 1 most common error that I see on agent profit and loss statements is the fact that they do not usually sever out the types of revenues that they get. So what you see on the screen in front of you is, particularly on commissions, you see it's separated by buyer side, and then you've got Beverly, Joe, and Tom as the 3 buyers agents on the team. And you can see that last month, and this is just a monthly profit and loss statement, that Beverly brought in 17.5, Joe brought in 20,000, and Tom brought in 20,500. Again, if you're a single agent, you brought in all the revenue, it's just going to be under one column over here. It's going to be your right-hand side column. But you've also got it separated out by leasing, listing side, property management, and there could be other forms of commissions that come in the front door for you, and that's fine. With a profit and loss statement, particularly on the revenue side, you always want to begin with the end in mind. And what I mean by that is this. Suppose a year from now, you wanted to be able to compare and contrast your listing side commissions in 2023 versus your listing side commissions in 2022. If you only kept one line item that said commissions, which is honestly how I see about 80% of the profit and loss statements that come in the front door, you can't then a year from now get insights out of your profit and loss statement to help you adjust anything business wise, because you don't have it broken out by specific segregated type of income. You don't have the ability to say, okay, last year in December, I brought in 20,500 in listing side commissions. This year, I brought in 23,000 in listing side commissions. And get insights out of that and decide, okay, what was it that caused a 15% increase in my commissions in the front door on the listing side? Was it simply property appreciation? Was it Facebook marketing, Facebook ad marketing campaign that I did? Was it additional bus benches that I bought? What was it that brought that cash flow in the front door? If you don't have all of that segregated out by specific line item, then a year from now, when you're trying to get those insights, you can't do it. Or if you want to do it, you've got to go back and break out 12 months of closing statements at that point to be able to tell, hey, this was listing side income, this was buyer side income. So begin with the end in mind. Think a year ahead of time, hey, or 2 years or 5 years ahead of time, hey, what type of insights would I like to get out of my profit and loss statement? What would I like to be able to compare and contrast month over month, year over year? Then keep your profit and loss statement in that vein so that when you get a year from now, you can go do those comparisons in contrast. If you get out a year from now and you've got too much data, and almost no agents ever tell me that they have too much data. I've very rarely heard an agent tell me that. But if you decide, you know what, I really don't need all of these separated line items, then a year from now, you can just collapse them into a single line item. That's much easier than trying to unwind it and separate it into 4, 5, 6 different line items a year from now. So that's the number one most common error that I see from agent financial statements is the fact that they did not separate out the commission line items on separate types of commissions. So I'd highly advise that. The rest of this just goes through different types of, and this is not an actual profit and loss statement. This is a hypothetical profit and loss statement on a $43 million team, but it's very realistic. It's one that I would expect to see, in Canada and America from any team that I talk to. You continue down to the cost of sale. You've got the buyer's agents that are being paid out, and none of this has formulas in it. So you can edit, you can add, subtract line items on this Excel spreadsheet to fit your specific business if you want. You've got referral fees paid into the team. You've got referral fees going out from the team, paid to outside brokers. So you can keep track of that. The next type of expense, or the next, let's just say the number 2 most common error that I see on agent profit and loss statements is we've got advertising as a line item here. And you see with advertising that I've broken out via billboards, bus benches, Facebook ads, and then realtor.com and Zillow. And these are not buyer leads that you're getting in from on advertising. These are banner ads that are placed. And I know you guys have Zillow in Edmonton. I just checked. There are 500 listings in Zillow in the Edmonton area this morning. I checked. So you can place banner ads there to get leads out of that. Now, one thing that you don't see is bus benches and expense being allocated to the rainmaker of the team. And what that tells me, if I was looking at this, if I was, somebody who might buy this team or an outside consultant, what that would tell me is the leads that are coming in from the bus benches are solely going to the buyer's agents only. Okay. So even if you're a single agent, what you want to do is break out the advertising and marketing. What I see a lot of times from agents, and this is the error, is again, like commissions, they'll just have advertising and marketing and they'll have a single line item. And the reason that you want to break it out as to what your specific individualized marketing expense is this. Let's say that you buy $4,000 worth of billboards per month. You get to the end of the month, or honestly, with most agent businesses, I want you to do this quarterly. With larger teams like a $43 million team or the $75 million team that has that video on my YouTube channel, I advise them to do the exercise that I'm about to describe to you on a monthly basis. If you're an agent that's in the 20 million or below, you can do this quarterly. what I advise you to do is this.
Hank,
Create a
sorry,
separate
I'm going to
spreadsheet.
interrupt
Yeah,
you.
go ahead.
We just have a question because you're continuing to talk about it. When you say a $75 million team, are you referring to total commissions or property value sold?
Property value sold. Sorry, that's volume. That would be a heck of a team if it was GCI. Holy cow! That I don't know of a $75 million GCI team, but if you guys have one up there, please let me know. I would love to talk to them and go through their P&L. But 75 million in volume, which is a very, very healthy size team, be it Canada, be it the United States. But good question. Here, what we've got is this $43 million team is spending $4,000 a month on billboards. And what I would ask this team to do on a monthly basis is create a separate spreadsheet, very simple, with 3 line items, and it would be, or 3 columns. One column would be how much they spent on the billboards. So $4,000, per month. And so at the end of a quarter, it would be $12,000. The next column would be how much in gross commission income that they were able to source back to the billboards. So let's just say, to keep the math easy, let's say that that was $36,000 of gross commission income that the agents brought in that quarter based on $12,000 of billboard spend. Okay, everybody should be able to follow me so far. So I've got $12,000 of billboard spend I was able to source back because I'm a good agent, and every single lead that closes through me, I ask them, how did you hear about me? How did you get to me? Was it a Facebook ad that you came in on? Was it a billboard that you saw my name? Was it friends and family? Was it a referral from another agent? And the reason that I want to do this is because of the third column. With 12,000 on a spend, $36,000 in gross commission income created from that, that's a 3x return. You should do this every single month if it's a big team, or if it's a smaller operation, every single quarter. You should go through this marketing exercise with your dollars. If you don't do this, then please stop spending money on marketing, because if you're not sourcing where your business comes from and then tracing it back to specific marketing dollars that you're spending to get those leads in the front door, you don't know where you should be spending your money. So please stop spending your money on marketing if you're not doing this exercise. Every single month, if you're a large team, or every single quarter, if you're 20 million and below, sit back and say, okay, I brought in, here's all the income I brought in over the last quarter. I brought in $36,000 from billboards. I brought in $12,000 from Facebook ads. And so if I brought in $12,000 in gross commission income from Facebook ads, but I spent $1,200 over a quarter, because here it says per month I'm spending $400, so it'd be $1,200 in a quarter. That's a 10x return on Facebook ads. What you should be doing is reallocating all of your marketing to the highest multiple. So you'll have 10x on Facebook ads, 3x on billboards, 2x on bus benches, 5x on Zillow. If you're like me and you have a limited marketing budget, so your funds are finite, you only have so many dollars to spend on marketing, you should consistently be reallocating that money to the advertising vehicle that's getting you the highest return. Hopefully that makes sense to you. If it doesn't, please put a question and Alex will let me know. But please do that every single month. If you're a larger operation, or 20 million and below, I would do it every single quarter, just because you need enough data to get analysis out of it. But do that exercise so that you know what your return is on each marketing line item. So where you're spending money, you can make sure that it's an investment and that you're not throwing away money. Okay, so that's the second most common error, is instead of just doing advertising and marketing one line item, break them all out and then do the analysis on the gross commission income versus the spend, and then figure out what your ROI is on it. Is it a 6x? Is it a 5x? Is it a 3x? Is it a 10x? And then reallocate your money to the highest return. Okay. The next most common, so that's number 2. The third one, and these are, charges that you would see on any team or single agent's profit and loss statement. Payroll. This is the third most common error that I see on agent financial statements. So this one would apply in particular if you have a team. If you don't have a team, you don't need to worry about this as much. But the split second that you get your single first buyer's agent on the team, now you need to concern yourself with this. So for those of you that don't necessarily have a buyer's agent on your team now, but may have one in the future, please listen to this. What I assume with payroll is that Jeremy is on my staff and he does marketing. What I assume also is Roberta is on my staff and she's in charge of operations and she also does some executive assistant duties. Susan is also doing some executive assistant duties, but she's mostly my transaction manager. So she handles all the contracts when they go pending and she gets them closed out. You can see over in the right-hand column what I pay them on a monthly basis as far as salary or compensation, and whether or not that's salary or bonus or what have you, it's irrelevant for purposes today, but you can see the total compensation. But you can see that Jeremy, even though he made $2,600 last month in compensation, only $1,250 was allocated to the rainmaker, meaning the leader of the team, and that $450 was allocated to each of Beverly, Joe, and Tom, the buyer's agents. The reason that was done is because in addition to working on some of the projects for me as the listing agent, he also did some open house flyers, Facebook ad creation in order to generate buyers, maybe for an ad campaign. And when those buyers came in, those buyers were handed off to Beverly, Joe, and Tom. Now, what I'm doing, I'm not billing Beverly, Joe, and Tom for Jeremy's services, but what I am doing is I'm allocating a portion of Jeremy's compensation to the work that he did for Beverly, Joe, and Tom. And I did the same for Roberta, and I did the same for Susan. The reason that I do this is because if it was just me on the team, I may not have a Jeremy at all. I may have outsourced that work to Fiverr, to an independent contractor on Fiverr who may have been able to do the work for me on that. But I brought Jeremy on the team solely for the purpose of not only helping me, but also being able to help my buyer's agents on their marketing needs. And that's one of the value propositions that my team has to my buyer's agents, is being able to say, look, you're not going to be up at 3 a.m. creating open house flyers. You're not going to be up at 2 a.m. creating digital marketing campaigns. I've got a guy on my team, Jeremy, that does that for you. And, do I get compensated for that through my split that I have with the agent? Of course I do. That's how a team does business. But Jeremy his time needs to be allocated on the profit and loss statement toward Beverly, Joe, and Tom if he's doing work for them. So, and it says over here, allocate time. There are two ways that you could potentially do this. One is not as detailed and one is very detailed. So I'm going to tell you the not as detailed route first. And it's consistent with the memo that Alex sent you this morning on the interpretation that I have of this profit and loss statement. You can do it in the not detailed way. I can sit down Jeremy, Roberta, and Susan quarterly, and I can say, okay, on a pro rata basis, typically on any given day, what would you say as a percentage of time are you spending on my stuff, meaning me as the rainmaker of the team versus the other buyer's agents? And Jeremy and Roberta and Susan may say, look, Hank, 50% of our time is spent on your stuff. And then the remainder of the 50% of our time on any given day is split evenly between the buyer's agents or among the buyer's agents. And I would say, great. So for the next quarter, I would just allocate the time accordingly, and it would look something pretty similar to this, okay? Or I could get extremely detailed. The legal profession has software called, and there are unlimited number of softwares. One is called time slips. There's unlimited number of billing softwares that lawyers and paralegals have on a daily basis. And since most of the work they do is on desktop, and most of the work that Jeremy, Roberta, and Susan are going to do are at desks, they can either do them at home or at the office, but they'll usually have a laptop or a PC open. After they get done with whatever work they do, and it's largely going to be project-based, Jeremy is going to do 4 or 5 open house flyers at a time. Jeremy's going to do, if I've got a team of this size, he's going to do 3 or 4 digital marketing campaigns at a time. He can just go into the billing software, just like a lawyer, and say, okay, I just spent 0.6 of an hour, which was, 36 minutes on this project for Beverly, or this project for Tom, or this project for Hank. And then at the end of the week, Roberta, my ops director, can take all of those, computer entries for all of them, assimilate them, and at the end of the month, generate a report for me that would literally get it down to, as a percentage of time, how to exactly allocate this by the minute. And so I'd get much more accurate numbers instead of just, sort of softballing this and trying to find out, what do you feel? I could get actual time. So either way is okay. And it's just how detailed you want to get. It could be, the first method, which isn't that scientific, and that's fine. And if you feel you want to operate your team on that basis, then that's fine. Even if it's just a single agent plus one buyer's agent, you definitely want to allocate the time that you have on staff, between the two people, because it makes more sense to do that. So, and then you get down to the bottom and you take the total expenses out of the total revenues to develop operating profit. And then the math flows down to your take home pay. So those are the three most common errors that I see. Is number one, again, breaking out the commissions into separate line items. Number two, breaking out the advertising into separate line items. And then number three, allocating payroll to the people that it should actually be allocated to for, who is using the work of that staff member. So, Alex, that's basically it in a nutshell. And if there's any questions, I'd be more than happy to take them.
We do have one question. I've asked for a little bit more clarity, but can you provide normal percentages for expenses?
Yes, good question. It varies on a team this size. I'd be looking for, as a percentage of revenue, I would look for expenses somewhere in the 30 to 32% of revenue. So I would probably have these buyers in. Look, most buyers agents, most team leaders are going to have their buyers agents on 50-50 splits. I usually counsel against that, and I encourage the rainmaker to take 60 and the buyer's agent to take 40. And then if they're going to have a listings manager, the listings manager would be on a 30% split. What I see more commonly is a listings manager on 40% and then buyer's agents on 50%, which means that their cost of, when we get down to gross profit, the gross profit is normally at about 55%, because if you take an average of 40 and 50, the listings manager and the buyer's agent, that's 45%, assuming, sellers and buyers are even on the team, which would get gross profit at about 55%. I don't like seeing gross profit at 55%, because then if the expenses are 35% of revenue, then you've got 55% minus 35%, then you've got net profit margin at 20%, which in my world, that's a little bit low. The $75 million team, the video that's on my YouTube channel, their net profit is at about 24%, but that's with the rainmaker took out about $156,000 in salary. So if I added that back in, he'd be closer to about 30% net profit margin. Okay, good question.
That's all the written questions we have, but I'll ask another one. What is the most common, how many expense items do you usually see on one of your reports?
Oh gosh, that's like asking a realtor, how long is it going to take me to sell my house? Alex, I've seen them all over the map. I've seen very abbreviated versions with like 12 line items. And to those people, I say, thank you, but I really need more detail than this. What you're going to notice is the $40 million profit and loss statement that I went over on that the very last video on my YouTube channel, or most recent video on my YouTube channel. It was honestly most beneficial for me to analyze it in the context of breaking out every single contractor that she dealt with by name or by duty, that like a locksmith or a home stager. And I had to break it down by individual vendor because she had so many of them. I had to see how much, and she was fronting this money and then getting reimbursed from the client, which she's not doing anymore. But I had to break it down by vendor name because there were so many of them. I had to get insights as to, okay, what is she spending this money? What is it doing for her? Is it bringing business in the front door? Or is she getting listings that she otherwise couldn't have gotten had she not fronted this money? And one of them was the $6,000 carpeting expense that she did up front, that she did get reimbursed for, but that was, again, something that I had to break out. if I had to answer your question directly, I would say somewhere in the neighborhood of 20-ish, and I'll use this term in big air quotes, for the typical agent, is I'll normally see 20 line items ish. And that could flex 5 either way. I've seen them as few as, 15 that I felt comfortable with, but I'll never complain. I'll put it this way. I'll never complain about having too much information. Usually if I've got a question for you, it's that I need more clarity. I need support. I need an invoice. I need a receipt to find out what the heck this expense was. So I'll never complain on getting too much information, not in what I do with agents.
No, that's fair. My last question for you is, I know we're doing this on an Excel spreadsheet. However, is there, there we go, here I am. Is there a program that you would recommend instead of doing it all over Excel?
The $75 million team in that video does it on a Google Sheet. And the gentleman that is the ops director for that team not only is a CPA, but is a Google Sheets wizard. And he can set up formulas until the cows come home on just getting everything into a Google Sheet. Do I see agents give me profit and loss statements on QuickBooks routinely? Absolutely, I do. It can, the $40 million agent, she had her P&L in QuickBooks. She got it to me. Alex, I'll be 100% honest. I couldn't even read the thing. Okay. And I deal with numbers on a daily basis. And I said, I can't, this subtotal. I couldn't do anything with it. It was too, there was too much on it. I needed it clean. And so, unfortunately, some of the enterprise solutions think that the more information they give you, they'll err on the side of a subtotal. So I keep telling them, take that line out, take that line out, take that line out. So that's what I'm most familiar with is Excel, Google Sheets, and QuickBooks. And honestly, I'm a fan of simplicity. The more simple you make something, the higher probability I'm actually going to execute on it. So please tell your agents, you don't need to get any more complex than those softwares for this. You really don't.
Oh, and that's fair. Well, Hank, tell them how to get a hold of you again for those listening on the podcast.
Sure. The best email to reach me on it is gogetalisting@gmail.com. And what I do primarily with agents is just sit down with them and analyze their P&Ls and business financials. If it's a larger team, I'll loop in the balance sheet and cash flow if you've got that. And we'd either do it on a one-time shot or a recurring basis, just on a recurring consulting basis. So that's what I do.
Wonderful. Well, thank you, everyone. Thank you, Hank, for joining us. You've been watching live on Facebook at Maxwell Devonshire Realty or on our YouTube channel, Maxwell Devonshire Realty Education Webinars, or on our podcast, as mentioned, Maxwell Devonshire Realty. Hank, it's been a pleasure. I know everyone's learned a lot, but if you have any questions, do reach out to him with go find a listing at gmail.com.
Go get a listing.
Go get a listing. My apologies, I heard it. Go get a listing at gmail.com and ask your questions directly to Hank. So thanks so much, everyone. See you.
Great, thanks.